I have a 79% win rate over 2 months with $25,000 in profit. A good trader will realize no matter how good the strategy or the model is, you're destined to lose. A trader will think, yeah, I'm either going to lose or win. But when it comes to the actual trade and they're starting to lose, that goes out the window. Wait, I'm losing? What do I do now? When the trader really understands that you are going to lose or you're going to win this trade, no matter what you do, no matter what you studied, that's the outcome. And I think that you need to admit that. Recently, a 2.5 million payout from someone. It's crazy. They can show the world that they've done something that no one else has ever done.
Fundamentally, what he's doing isn't any different to what you're doing.
A trader can't do what looks good. They have to do what actually is good. It's not about having a difficult edge in the market. It's about having a simple edge.
So how did that turn into profitability? Like, what did you change, or what kind of flipped that switch where you could actually start seeing consistent profits?
I guess.
Hello and welcome back to the Alpha Capital YouTube channel. Today we've got Bani here, going to tell us a bit about his trading journey, the highs, the lows, how it all started, and get to know how you've found the success that you have. Hopefully we can learn a little bit from it. So
yeah,
Bani,
nice
welcome.
Thank you very much. I appreciate it.
No, it's very great to have you. So the best place to start any story is at the beginning. So just tell us a bit about how you started trading, or I guess growing up, what your aspirations were, and how it sort of morphed into where you are now.
It starts when I was in college, kind of. That's kind of the first introduction to trading. So when I was in school, I think I didn't behave properly.
Yeah.
Not as if I was like a bad student. I just didn't put a lot of effort in.
Yeah.
And I felt like I was capable of it, but I didn't. And as I grow older now, I think back, maybe I should have, in a way, because I'm not one of the people that will push people away. Because people, even now they'll ask me about should I just drop out uni and start being a full-time trader? And I don't recommend that anyway. But anyways, I ended up not going to uni or college after high school. In Scotland, it works like that. You pick either uni or college after high school. So that first year I took an apprenticeship, but it didn't work out. After a month, that was it, right?
Wow.
And that kind of, even that put me like in a situation where it's like, I kind of have to make something work now. So after this, I'm 17 or 18, and everyone around me has either went to uni, got a full-time job, or they're in college. So I feel kind of like left out, like everyone's doing something and I just got fired from the apprenticeship. What do I do now? Because I've already made the decision I'm not going to uni, and I've already missed the college enrollment date as well. So I'm just completely stuck in a way. So my dad has a family business. It's like a small family business, local sort of thing. So they were just like, okay, well, for the next time being, don't waste your time, just help. So I was like, okay, that's fine, I'll do that. Yeah. So I was doing that for a bit. And even that, I'd say like everything, even these things, they are so important to what made me, because I understood the value of time and understood the value of like money and how hard you have to work to get the things that you want. So I was more than happy to like obviously help in the family business, but obviously what comes with that is, you don't obviously get the same sort of like career that maybe you intended to. And obviously when you're working with family, you're not going to get the same sort of like, pay and things like that, which is fine. And I was happy to help, but it kind of made me manage my money in a way, because there were things that I wanted and I just couldn't get it. And so it came to a year later. I'm still kind of, or maybe 6-7 months later, I'm still working with my dad. And I'm just like, I need to try and make money on the side somehow. There must be something. And this is before trading. So at this point, I'm like looking at the whole drop shipping sort of thing. And maybe it was a phase of mine, I don't know. So I didn't drop ship. I just bought in bulk from China, from Alibaba.
Okay.
And I got like these phone chargers. And looking back, I mean, it did okay, actually.
Yeah, it's a good hustle.
I think I bought them for like 70p each wire, and I was selling them for like $3.99, $4.99. So a little bit of profit on each one.
Nice.
But the problem with that when you're young and you don't have that much money is you can't buy that much stock.
Yeah,
So
yeah.
how do you scale it properly? And there's also a lot of time, but it was slow. Eventually, I sold the stock, but it took a while.
Yep.
So, anyways, few months later, it comes to the time where I can enroll in college again.
Okay.
So this time I thought, okay, well, I'm not really doing anything. I'm here helping my dad. I'll just try to go back to college this year. So this time I enrolled in college, and I was like, what should I even do in college? So, anyways, long story short, I ended up doing journalism in college.
Okay.
So that was the one thing in school that I was quite good at, like writing. I was good at writing and I was good at speaking. That's what I think anyway. So I ended up taking journalism. And what ended up happening is I would always had a passion for business. So I ended up writing about business in my journalism like assignments. So then it ended up that I started writing about stocks and cryptocurrency and stuff like that for one of my assignments. And long story short, again, it kind of made me think after reading the stories and researching, if they can do it, why can't I? That's what I started to think. These guys are making so much money from trading stocks. I mean, look at how much money's flowing through the banks, and what like surely I can make something of this too. So I think this is where I started being a bit intrigued, and maybe my mind started going like astray while I was studying. Maybe I started putting a little bit less focus into the actual course and more focus into how I can do that. So that's how it's kind of started. And then after that, I, especially during the whole GME pump and when crypto started booming and all of that stuff in early 2021, I think.
Yeah.
I was already starting to trade at this point. But I wasn't having much success, obviously, then. I was losing money, and I didn't have that much to put in.
Yeah.
And at this time, I also didn't know that prop firms were a thing. So this is that cycle that probably a lot of people during that time went through, where you just kind of chuck small amounts of money in. You don't really get anywhere. And half of those people either gave up, and the other half eventually maybe found prop firms.
Yes.
And I think that's what the thing is, that for anyone that started in the time that I started, prop firms were like, this is like, I mean, the first time I heard about it, I was like, surely this, how is this a thing? Like, how can I trade $200,000, for example? How?
Yeah.
So when anyways, so at this time I start trading crypto futures and stuff like that because I didn't have a lot of money. So I was like, futures, why don't I trade futures? Because I can use leverage.
Yeah.
And at the time I was like, playing about with it. I had like a bit of success actually. So
some of the leverage on the crypto futures was crazy as well.
Yeah,
right? It was like 1
they
to
were
500,000.
allowing, and when you don't have good risk management,
Yeah.
you can make crazy gains, then you can lose it all.
Yeah.
So obviously this is a similar thing that happened to probably a lot of people. But I think the main thing that I take away from that is that once you see the money, even if you lost it, you know that it happened.
Yeah.
Like, and surely if I could have done it at one point, I could probably do it again. So I had a situation where I flipped $300 into $2,000 within a week.
Very nice.
And obviously at that age, it's like, how is that actually possible?
Yeah.
So eventually I lost that. Of course I did, because the way you make it is the way you lose it.
Yes.
So if I was I didn't think I was, but now I look back, I probably was just flipping a coin. Do you know what I mean?
Yeah.
I didn't really have a solid plan at that point. So I did that for a few times, and I kept kind of just making good amounts, losing it, and then at this point I get a job. While I'm in college 3 days a week, and then I think 2 days a week I was in retail. I was working at Tesco.
Okay.
So I'm getting a bit of an income as well, and I'm in college. Here and there, I'm also helping in the family business. So I'm just doing it whatever I can. So then there was this one last time, and I was like, I've lost the money so many times, but I'm just not really sticking to anything. So I just kind of made a plan in my head that whatever happens now, I literally can't afford to keep doing this. If I want to stop trading and quit, I should just quit. But if I'm gonna just be gambling and not following a plan and not really doing anything, then what is the point of me even doing this? Because I'm just throwing money away, and I've kind of worked hard for it. Working in retail and stuff like that. It's not like you don't just get money. So
Yeah.
I'm starting to realize the value of that now, because I was a kid, being like 19, 20 at this point, even I think 19 probably. So that's what I did in the last kind of thing, that I have taken too many losses, and if I really want to make this work, I need to make it work. So
Yeah.
going into that, that's when I started actually trying to properly trade and having better risk management. So in December 2021, that was the first month I made 5 figures from trading, but that was from futures.
Okay.
Okay. So that was like life changing, because that's like, I'm still in college. I'm still working in Tesco.
Yeah.
And there were, obviously, even now, the way I trade compared to then is completely different, because that's years ago. But that was kind of like the first time that I thought this could really be something special. So yeah, that's how it started. And obviously from there, it was the next year I found prop firms in 2022. But yeah, I think that's where everything started.
Wow, man. Yeah, there's a lot to unpack there.
Yeah.
Interesting that your family owns a business. I don't know if a bit of that entrepreneurial kind of mindset
maybe
got into your head a little bit, which is quite amazing.
Yeah.
But I think when you said it was learning when you're doing your journalism and then learning about stock trading from that, I always think of this sort of butterfly effect thing of like everyone who comes across trading, they come across it in a different way.
Yeah.
And you think, what if I would have written about something else? Like, would you have been where you are now and stuff?
Exactly.
So it's really crazy to think, man.
Yeah.
And also when you said about, you get to a stage where you just have to make that decision of like, okay, like Einstein said, the definition of insanity is doing the same thing over and over again and expecting a different result. So sometimes you're just like, I did this stupid thing and I lost money. I did this other stupid thing and I lost money. It gets to a point where you're like, okay, I've just got to stop doing that thing now. Like, I have to change something. So how did that turn into profitability? Like, what did you change, or how did you adapt your strategy? What were you doing before compared to after?
Yeah.
That kind of flipped that switch where you could actually start seeing consistent profits as opposed to just making a bit and losing it, making a bit and losing it.
So back then in 2021, when I made that decision, as I say, what I ended up trading then, although it was getting better, it's nowhere near what it is now. Because I always say that a trader's aging like wine. Like, there's no timeline that you can put for a trader, because the longer you're in the market, you're going to be better and better and better. So
100%.
Even though we'll probably in this video podcast talk about like my profits and stuff, I'm sure that next year I'll probably make more.
Correct.
And I'm sure that the year after that I'll probably make more as well.
Yeah.
So even though I started getting better in 2021, it's completely still different to what I'm doing now. But it started from, okay, my risk management is completely out the window. There's nothing there. I'm risking random amounts, and I'm basically hoping to win.
Yep.
So that's the first thing that I need to change. I need to always have risk management. Obviously, on a futures account, it's a bit different on a personal account.
Yes.
Too, when you're trading prop firms. So even then, I still had risk management. Okay, now I'm going to start doing that. And then another thing that's important with personal accounts is paying yourself. Because with prop firms, I think is a bit different. You'll wait for your payout date and you'll get paid. With a personal account, it's however long you want to drag it. The problem is someone coming into the market with even $500, they want to make the profits that people are making after 10 years of trading.
Yes.
So how do you get from £500 to £100,000 in your account without doing something stupid?
Yeah. You've got to leverage it up like crazy and just risk the whole thing on every trade. So 50% risk,
Even in that case, if you were going to do that, there's going to be a point in that time you're going to make either a mistake or you're going to have to pay yourself out.
Yeah.
And if you paid yourself out, you're, in your eyes, hindering your own progress, because I'm trying to make 100K.
Yeah.
So,
yeah, you've made $5,000, you pay yourself 3 of it, and you're like, yeah, but now I've just... got rid of a lot of capital that I could have, then you leverage it up even more. Yeah. So
that's the biggest problem with traders that trade their own capital.
Yeah.
Because you're trying to get the results that someone has had after 10 years of trading.
Yeah.
You've been trading for half a year, and you want to replicate a 5-figure month off of what? Off of a few £100.
Yeah.
It's not possible. And if it was possible, you're going to do it by gambling, and the same way you made it, you're going to lose it.
Yeah.
So that's what I would say. I had to think about that. And with the strategy, then is very different to how it is now. I was trading, actually, it kind of all comes back full circle, but that time I was trading slightly higher time frame trading, in a way. And it was working for me. I was trading higher time frame, and I was waiting a few days per trade, which is good. But then in 2022, maybe I got influenced by other people that I seen around me trading lower time frame and doing this, or maybe you should try this and you should try this. And I guess and a lot of traders will go through this information overload where you've just learned too much, and you might have found something that works for you, but he's saying that this is better.
Yeah.
And that guy's saying this is better. And the guy that just posted like a 50K screenshot, he's doing this. So I'm in 2022 kind of discovering myself.
Yeah.
So I would say 2021 I discovered trading. 2022 I discovered me.
Wow.
And me discovering that was more important than the actual like technical analysis, because analysis only takes you so far. What actually makes you profitable is understanding you and what's good for you. So I had to block out that noise. I had that period where I guess maybe I did go astray and start trading stuff that wasn't even part of my own plan.
Yeah.
Because other people made it look like attractive. So, that's kind of a little bit of the start of 2022 for me. And then after that, I said the trader's aging. So in 2023, I said this is when I started like extremely strict. I'm only going to trade the 15-minute time frame, not under the 15-minute time frame ever. And I'm going to only stick to that because the trade frequency is lower. And if the trade frequency is lower, it's a higher probability that when I take the trade, it's most likely going to be profitable. And if not, I can hold myself accountable because there's less trades in the week.
Yeah.
So humans can only make a certain amount of decisions in a day.
Correct. Yeah, decision fatigue is a real thing, man. Yeah.
If you think that you are smarter than the market, and I think a young trader or even someone that's just been in the market for a little bit of time, they have a lot more ego than someone that's been in the market for years. And I say in 2021, I thought I was so much better than I was. But now I'd laugh at that, like that strategy, the model and everything like that. So you get too big for your boots. And you see, I mean, even then, I was looking at people trading low risk rewards and stuff back then. I'm thinking, why are they doing that?
Yeah.
Like you could, why didn't he just hold till 20R? Like, but it's such a limited mindset, and you age and you understand that ego is what's stopping you from being profitable. It's because you think that you're so good and you think that you're better than the market. A good trader will realize no matter how good the strategy or the model is, you're destined to lose, and there's no time frame or anything that's going to save you. Like, you are literally, every time you go into the market, you're either going to lose or win. And the moment that someone understands that and really understands that, because a trader will think, yeah, I'm either going to lose or win. But when it comes to the actual trade and they're starting to lose, that goes out the window. It's like, wait, I'm losing? What do I do now? And it's so when the trader really understands that you are going to lose or you're going to win this trade, no matter what you do, no matter what you studied, that's the outcome. And that is what I think had changed for me at that point. It was understanding me and understanding that there's nothing that's going to save me. I need to find a model that I have enough data on and that's profitable for me. And for me, I'm the type of person that I don't want to sit on the charts all day because that does affect my psychology. And I think that you need to admit that. There's a lot of traders that they're unprofitable because they can't admit it. They want to be, trading the 1 minute all day, every day, just because it looks good to them. Not because it is good to them. It's just, if I was profitable on the 1 minute and I got this many trades a week, I would be making this much. It's like a hindsight mindset.
Yeah.
But a trader can't do what looks good. You know, they have to do what actually is good. So it's not about having a difficult edge in the market. It's about having a simple edge that you can repeat and something that's easy on your mind and your psychology. And I think if you have all of that, then you're more than likely to actually become profitable. And I think that's the difference between profitability and unprofitability.
100%. Wow, man. I mean, discovering prop firms, I've said this so many times, but I truly believe that prop firms, not just in trading, but prop firms are the single greatest wealth building opportunity of our generation.
Yeah.
Right? When I first heard about it, like you, I was like, there's no way that can be possible.
Yeah.
And then you see it and you're like, the thing is built into it is the risk management and is paying yourself and all this stuff. Like you say, there's so many people that say, oh, you know, you're trading a personal account. When do you pay yourself? Or if you've just put $500 into a futures account, you've got to risk half the account because otherwise you can't flip it.
Exactly.
Whereas, you know, if you've got X amount in funding, you can make 2% on that, 3% on that.
Yeah.
You haven't got to make 8,000% on your personal account to make that money, right?
Yeah.
So the thing with prop firms is, man, people can say about, you know, all the rules and all this stuff, but if you can stick to the rules, you can use these things to get your payouts. It's the best way to create this sustainable system within trading that doesn't mean you have to over leverage and you have to do anything crazy like that. Like, it gives you the opportunity to execute an edge that allows you to make these small gains and actually benefit from it, right? And then you get your payouts and stuff like that. So you started on sort of higher time frames, you ended up toying with some lower time frames, then you went back to higher time frames. But you said the strategy was different, but the time frames were the same. So how did you sort of settle on your current strategy, and how did you decide, okay, this is going to work for me, and I'm going to stick with this throughout the losses, like you said?
So I used to back test quite a lot, but I didn't do it in the way that I think a lot of traders do it, which is just like, you know, look at trade a strategy for about a year on back testing and just see what happens. I was kind of more studying the way that candles formed and the way that like the week looks. Long story short, I would always do a weekly analysis, and I still do that to this day. Every week I do a weekly analysis, and that's like what my bias is for the week. What happened was I realized that at the end of the week, more than likely, or more than most of the time, I would have the correct weekly bias. But I would realize that at the end of the week, I might not have actually had a profitable week. I might have had a break-even week, or maybe I had a losing week. So I'm thinking, if my weekly bias is good, then how am I not ending the week profitable? Then I realized that if you're doing weekly bias, but then you're executing on the 1 minute time frame, what's the actual, like, so do what's easier for you. If the weekly is easier to predict, which it is, then you should be trying to replicate that on a time frame, which makes it easier to do. So if I'm trying to say, okay, the week looks like it's going to go higher, but I'm trading on a 1 minute, it's my stop loss is obviously going to have to be considered the fact I'm trading a 1 minute time frame. But if I'm trading the weekly and I'm trading the hourly, now I'm just trading the expansion of the week, where the week is actually going. So it brings down the room for error quite a lot. So I think that's how a trader discovers these things. It's not just back testing like that, like, you know, just doing a strategy and hoping to see what the win rate is. It's either back testing or doing it in real time. For me, I guess in my circumstance, it was kind of like real time. I'm looking that my weekly bias is good, but I'm not really profiting much off of it. I mean, I can end weeks profitable, but it's there are so many weeks where, you know, I'm like literally perfecting the bias so well, but I didn't make anything. So it's like, why overcomplicate it? And I think that is the problem with these traders now. They want it to be some sort of magic show where they can show the world that they've done something that no one else has ever done. You know, I made this strategy that does this, and you'll never believe how I did it. And this, it's not a game. Like, you have to do the simple thing, because the simple thing is going to aid your mind. And if your mind is in a bad spot when you're trading, you will never be profitable, because one day you can just blow everything. So I think it was that I understood the data, and I realized that just logically speaking, if I'm looking at higher time frame bias, I need to trade it on the higher time frame. So
Smart.
yeah.
I mean, the fact that you came to that realization, though, that I was good at predicting where the week goes,
Yeah.
so let me try and actually use that to my advantage.
Mhm.
That's why it's so important to pay attention to what you're actually doing,
Yeah.
making notes of your trades, journaling, and saying, okay, at the end of the week, what did I get right? And if
Mhm.
you can do that and you can get to the end of the week and say, well, I thought we were going up
Yeah.
and we did.
Mm-hmm.
If you can notice you can do that consistently, then
Yeah.
you know you can leverage that
Yeah.
to your advantage, right?
Exactly.
And when you say weekly bias, is that mostly just like purely technicals, like draw
Mhm.
liquidity or stuff, or do you factor in
Oh,
fundamentals
I
or anything
do,
like
yeah.
that?
So really, I have two models. I have an intraday model, which is M15 and higher, but usually M15 or M30. That's it. Because I realized with intraday, again, going back to the higher time frame thing, on intraday, I'm trying to predict the daily candle.
Yeah.
On the higher time frame, I'm trying to predict the weekly candle. So why, if I'm going to be trading the intraday model, do I have to look at what every 1 minute candle does? I don't.
Yeah.
Because I'm looking at the days either going to be bullish or bearish. So how do I replicate that in my trade? And I realized that the 15-minute time frame was like, for me, it's either the whole day's range or
Yeah.
it's the sessions range. Whereas the 5 minute, you can have, a bearish 5 minute chart, but the day ends up bullish, for example, because it's a lower time frame. But the 15-minute, because it's 3 times higher than the 5 minute, because there's less candles,
Yeah.
and the time taken to form one takes a little bit longer. Like 3 15-minute candles takes 45 minutes to form.
Yeah.
Whereas for 3 5-minute candles, it takes 15 minutes to form.
Yeah. Kind of
So-
smooths out the noise a bit.
Yeah. So for me, the reason I picked this 15-minute originally was because I felt like it's the bridge between higher time frame and lower time frame. When we get above the hourly, we can maybe look to be in a trade for a whole day or 2 days, maybe.
Yeah.
When you're on the 15-minute, let's even go lower. When we're on the 1 minute, we're going to be in a trade for, potentially minutes, potentially an hour, but I guess in that window.
Yeah.
Okay. When you're in the 5 minute, the same story. You could be in a trade for 15 minutes. You could be in for 2 hours.
Yeah.
Okay. When you're on the 4 hour, you're swinging the week. The 15-minute is the time frame for me that you can trade the daily bias, but you don't need to get too many mistakes in the process.
Yes.
So that was the bridge where I can take an intraday trade, but it's literally today's trade, and I don't need to take too many losses along the way. And I also don't need to swing for 2-3 days because I'm not trading hourly and above.
Yeah. Do you ever hold overnight, or do you try
I
and
do.
close at the end of the day?
That's my other model.
Okay.
So that's the intraday model. Now, what makes me decide what I'm going to trade
yeah.
is using the economic calendar and doing the bias.
Okay.
So, for example, it's going to be a week with CPI and PPI. I know there's going to be a lot of volatility and there's going to be a large range, most likely because logically there is 2 very large red folder events.
Yeah.
On weeks like this, I'm not going to trade the intraday model because if I get it wrong, the risk is a lot larger because I can get slipped.
Yeah,
I can
smart.
lose a few percent extra. I can, so this is where I use my swing model, which I can use on other weeks too, but just briefly. The swing model is understanding that volatility happens on large folders like the red folders. Instead of trying to predict it on the 15-minute, just put your weekly bias on in the swing trade, and most likely during the higher folder news events, you can basically just look at trading the weekly range with a larger stop loss. Because if I'm saying the weekly is going to trade higher this week, okay, but I don't want to trade intraday on Thursday or on Wednesday and Thursday because there's CPI
Red
and
folder
PPI.
news, yeah.
So why don't I just enter based off a swing trade with a larger stop loss and let price play for a few days? By the time the week's over, number one, if I was to get it wrong, my stop loss is a lot larger on my swing position. So I'm safe. If I'm to get it right, which a lot of the time you will get it right because it will be your full weekly bias anyway.
Yeah.
And I wouldn't want to waste my whole weekly bias just because I'm trying to itch for a day trade. So the swing model is basically looking at the range that we're potentially going to have on the week and trying to trade the weekly bias in one trade. So the difference is with the swing model, I'm looking for trading the weekly expansion, and for the intraday model, I'm looking at trading the daily expansion.
Okay. And what assets do you trade? Do you stick to the same ones?
Just Euro USD and GBP USD. That's it.
Okay.
Yeah.
And you choose which one based on the folders, like which news is coming up.
Either based off that or based off the strength of Euro GBP.
I was
so
gonna
basically,
ask,
if Euro GBP is weak or strong, then look at that. But also, I might look in the scenario that like GBP USD has hit my objective and Euro hasn't. So I might be looking in that instance to trade Euro so that the objective goes at the same time in a way like that. But mainly it's using the dollar and then looking at Euro and GBP after that.
Okay.
Yeah.
So you use the DXY as well?
Yeah, that's like I mainly only look at the DXY actually.
Okay.
I figure out what pair it is after everything. Like I do DXY, all the weekly analysis, everything is on the DXY, and then when it comes to taking the trade, I will look in that moment between Euro and GU and see what one is weaker or stronger, what one has more probability to win. And what I've found is with swing models, it's a case where most likely, if DXY is going in the right direction for your trade, you will most likely win either EU or GU because they are correlated against. With the intraday model, it's a different story because if you executed the trade at the wrong time, even though DXY went in the right direction, you might lose GU or EU because you took stronger or weaker pair. So with the intraday model, it matters quite a lot. With the swing model, eventually they should both go in the right direction because it's not so reliant on one day of strength or weakness because it's the overall higher time frame trade.
Amazing. Do you know a guy called Ads?
Yes.
I knew it. This is it. He was here. I did a podcast with him, and he was saying, "Do you know this guy TradeBani?
Yeah.
He knows what he's doing." There we go. This is the guy himself.
Yeah.
Straight from the horse's mouth. Yeah, because he was Scottish as well, and
Yeah.
he said up in Scotland that you were.
Yeah.
There we go, man. Making connections.
Yeah.
That's fantastic. Yeah, because when you said about using like the DXY and then the EG as well to get the little bias, I was like, oh yeah, oh that's fantastic, man. Yeah, that's cool.
So Ads originally was my student. He was in the mentorship.
Yeah.
And I think what he's achieved is absolutely amazing.
Yeah.
I'm so happy for him. But yeah, now he's like smashing it. Like he's doing so well.
Okay, with that said then, I want to talk about just mentorship in general because like when I first started, you get on YouTube, you get on Instagram, you try and think, okay, I need to try and find an edge. I need to try and find someone who knows what they're doing. Mm-hmm. And it's actually surprisingly difficult because there's a lot of people that it's easy to look like you're profitable, right?
It is.
So, I mean, how did you get into discovering what you did and mentoring and helping other people to get to profitability? Because I'm always here to shout out anyone who's actually legit, right? Yeah. So if people need to know how to trade and stuff. So how did that sort of come about?
I think it came about in more of a, like, it was a way that was unplanned. Like, I didn't plan, let me go on social media.
I was going to say, you don't give me that vibe. Like,
no.
Yeah.
I didn't plan to do it. It was more that I just started posting videos about trading and, like, a lot of people were interested in what I'm saying.
Yeah.
And it kind of started like that. I just kind of got attention in that way. And people had a lot of questions to ask. So that's when I thought, okay, I've got so many free videos online, but people are still asking for the fine print and things that maybe they might need to see in a live environment.
Yeah.
So the mentorship isn't just like, me just... Because I think the problem with a lot of people's mentorships today is that it's very, like, cherry-picked information.
Yeah.
They might show, like, a trade that worked to say, this is our trading model, but that's one trade. So
I've got so much to say about all that, but I won't go off on a rant. But no, it's so true, man. Like, posting a winning trade on your Instagram story does not make you a profitable trader.
Yeah.
Like, you can lose 9 out of 10 trades.
Oh, yeah.
Post, I hit a 5-hour trade. Everyone thinks that you're amazing.
Yeah.
And you actually just bleeding money. So, yeah,
exactly.
Completely true.
So I think what attracted the people to join my mentorship is because I'm doing everything live.
Yeah.
And even still, I'm doing everything live. And I was actually talking about it, like, on the way here. Most people fumble trading because of this, and this what happened this week. Okay, so I started off the week with a loser. And I also documented that loser live.
Yeah.
So my mentorship watched me take a loss this week.
Yeah.
And with the pressure of a mentorship, people might not talk about that, but you have to.
Yeah.
You have to have the guts to. If you're claiming profitability and you can't show you doing something in a live environment, then what are you hiding from? And I don't understand it, because no one is going to take anything away from you for a loss, because that's normal. And if they are, then I think you've marketed yourself in the wrong way. So that's why, anyways, people like ads and whatever, are the guys that ended up joining my mentorship. I think that because I didn't market myself as a flashy person, they ended up joining a place where not only I'm able to actually teach, because they're not people joining for a quick flip.
Yeah, you attract the right crowd, right? Yeah.
So you end up getting what you are looking for. Yeah. If you're the guy that says, I want to go overnight flashy and make like 100K a month from the signals chat, and you post Lamborghinis and this and rented stuff, then you take a loss. Those are the people that are going to complain and be upset because they don't know what they're signing up for. They're signing up for the Lamborghini.
Correct.
They're not signing up to be a trader.
Yeah.
So it's important for any trader to be themselves and market themselves in the right way. So my aim was to teach people how to actually trade. And that was it. Like, just this is how to actually trade. I have a lot of free videos online, and I'm going to do it live. So there's obviously the videos where I've showed like what the model is and this. But I'm like, here's all the videos of me doing it like pre-recorded. So how to learn the coursework and whatever. And every week and every day I'll do it live, because you should be able to not only see how to win consistently, but how to lose and take it like a loss.
100%. I know that I want to talk about the book, you know, the biggest loser wins, or the best loser wins, sorry. And yet, like you say, so many people are so reluctant to show their losses. I was in a mentorship, and they would post up, oh yeah, I took this trade, and post a win, another one post a win, and this other one sort of post a win. And I was like, if these guys are you actually smashing like 6, 7, 8R trades 3 times a day? Like, you should be a billionaire. Like, that doesn't make any sense.
Mathematically, it doesn't. It doesn't add up.
And then you ask, like, oh, do you ever take any losses? They're like, oh yeah, we sometimes take losses. I'm like, well, where are they then?
Yeah, you've never posted any.
Like, and sometimes they'll talk about like, okay, well, what is a valid loss versus an invalid loss? I'm like, well, I never see you take a loss. So like, you take one and you feel stupid because like, well, I should have taken a loss.
Yeah.
But you don't know, well, should I have taken that trade? Was that part of the system? Was that whatever? And just that lack of transparency, man. And like you say,
and you know what? They're setting their students up for complete failure. Yeah. Because, as you said, they don't understand the realistic side of trading, because they don't see their mentor taking a loss. Yeah. This guy, they think that he's like the best thing ever. Yeah. And then when you take a loss, probably following the model they taught, you're like, I'm completely, I don't know what I'm doing now. Yeah. He didn't take that loss, I did. It's the model he taught. Yeah. Well, what's going on? Like, am I doing something wrong? So I think it's important for anyone claiming profitability to not only show losses, because you are going to take losses, but you should be able to do it in a live environment, in my opinion. Agreed. The way I do it is slightly different, because I don't want people to just take signals. Yes. So I don't just here buy and sell. It's more like plan making. So it's like, that weekly analysis that I do that with the mentorship. Nice. So I'll say this week I'm looking for DXY to trade higher because of this and because of that. Yeah. These are the economic drivers in the week. Based off of this, I'll probably be looking to take a swing or an intraday because of that. Yeah. The days with the volatility, let's say Thursday's got unemployment claims. If I'm going to take an intraday trade, I'll probably take it on unemployment claims day, because there'll be some volatility, but it's not like PPI or CPI. Yeah. EU looks like this, GU looks like this, so I'll probably end up taking GU. So it's more like I'm showing you what you learn in the videos, and you can learn after you've seen this for months. You'll understand how I do it every single time. Yeah. So that's why. That's
only fair, right? Because if you had the mentorship where you want to teach people how to trade, and then you're just like, okay, I'm just going to like live stream for 12 hours straight every day, live, and you can see what I'm doing. No one's going to learn anything, because I'll just wait until you hit buy. Yeah. Especially if you're trading 15 minute. Yeah. Just
so
come back and just
that's
smash.
The issue as well. Yeah. Some students as well, they're like, Bani, can you live stream when you're in a trade? I know the implications of that. If I show I'm in a buy, everyone's going to enter a buy. Yeah. So they won't learn accountability.
Yeah, correct.
And they're gonna like set themselves up for failure too. So mine's just like I'm trying to do both.
Exactly.
I'm trying to show live trading, but so that you, after you've seen it for 4 or 5 months, or even 2-3 months, you've seen I'm doing exactly the same every single time, win or loss. Now you know what I'm doing.
Yeah.
You don't really need to ever think of something else.
Exactly.
You've seen the way I think, because
Yeah.
I'm breaking it down how I think. Like, it's like, okay, this has happened. I'll look for this now. And then that might happen or it might not happen. I'll say, okay, it didn't happen, so
Yeah.
I'll be looking to da-da-da-da-da. So they can see how I think.
Yeah, it shouldn't be a surprise.
Yeah.
Even if you're not live streaming at that
Yeah.
particular time, they should know what trade you would have taken anyway,
Yeah.
because they know the system and they know
Yeah.
you're thinking. So.
Yeah. So I do it in that format. And one thing I did, as you said, I created a something called the public journal.
Cool.
Where, because what happens in these mentorships, especially on Discord and stuff, people just post wins and wins, even the students and members.
Yeah.
And that was affecting other people. So I said, this isn't good for everyone. So I ended up creating this public journal. I said, you have to post losses and you have to post wins. If you only post wins, you're going to get kicked out, because
Wow.
because, it's not only affecting me, it's affecting other people trying to become profitable. They used to see these few guys come in the mentorship and all they would do is post wins and wins and wins. It's like, what are you even doing in the mentorship then if you're better than me? I've obviously taken losses here and there. You've apparently never taken a loss.
Yeah.
And so these guys are starting to think, what's he doing that's different to me? So I made it a thing that if you're in the mentorship, you have to use this public journal and post losses and wins. And if it came to it, we'd have to verify if they were like just posting unprofitable or just lies, basically. So that was such a big help. And it's so nice now, even on a day where maybe like I'm a little bit busy or doing something, I will look at all the members take the exact same trades as each other without communicating with each other because of the model. So and also even the same losses too. And I think that's good. So yeah, I think a mentor should be able to publicly do it live on a live environment, and they don't have to do it every day or give signals.
Yeah, because that kind of sets
Yeah.
a bad example
Yeah.
with
But in some sort of way, you should be, and you should show losses, and you should be in the situation that someone is trying to learn from. So, what do I mean? Like, a student's going to ask, well, how do I manage this specific entry model, or what about the stop loss here and this? And you don't know the answer. Because what? Like that's a big red flag.
yeah.
If the mentor doesn't even have enough experience with his own model that he's thinking, oh yeah, actually that's a good question.
Yeah.
Any question that comes about the model, I've probably answered it like 500 times.
Yeah.
So I just feel like you need to know your system in and out. And of course you need to be profitable.
Yeah, well, I think that's where a lot of the other
Yeah.
mentors might be failing, is that they
Yeah.
don't actually have a profitable system and they know
Yeah.
what they're doing. Because most mentors wouldn't encourage people to post their losses. It's quite the opposite. Most of them just want their students to post their wins
Yeah.
on their story and tag them in it,
Yeah.
so that it brings people and they want to.
Yes,
Because
definitely.
losses, that's bad publicity
Yeah.
for some people who don't know what
Yeah.
they're talking about,
Yeah.
right? But that just shows the level that you're going to get that like actual realistic
Yeah.
transparency and giving
Yeah.
people realistic expectations.
Yeah.
Because there was another, I remember seeing once a trading community that they had like 2 or 3 different strategies, and they got every one of the students to pick one of the strategies to use, and they were all trading it, and then each of them, when they had a winning trade, they'd post it in this particular thread, and at the end of like the month or 2 months or whatever, whoever they totaled up, how many pips each one had like profited or whatever, and whoever got the most at the end of it, they were like, oh, that strategy won. And it's like, what, you're just getting like a Discord thread where everyone only posts their wins and they're
Yeah.
seeing which ones were the biggest. It's
Yeah.
like, well, just pick a 20R like strategy then.
Yeah.
And it doesn't matter that you lose 50 trades in a row.
Yeah.
Just post the one winner.
Yeah.
And it's like, oh, it's crazy, man. Like they're drawn in by this idea of this magic secret where no one ever seems to take a loss.
Yeah.
But like you say, man, it's just about winning more than you lose over time and correct risk management.
Yeah. And also for the student to see their mentor take a loss, it's very good for them, because they'll be like, oh,
Exactly.
I am actually trading the model, and there's a loss.
Yeah.
But because people have this problem, people say they're not looking for a 100% win rate, but they are.
Correct.
You
yeah,
know?
Yeah.
So, and I said this example so many times in my on my TikTok videos, but I always say about like a trader could take 7 wins in a row and take 3 losses and say the strategy doesn't work.
Yeah.
So
completely.
So that's a huge problem because you forgot why you're here in the first place.
Yeah.
You forgot maybe what passed your phase 1 and phase 2. You get to live stage, you took 3 losses. That might just be the way that price has distributed at that moment.
Exactly.
That might just be the sequence of. I say it's like the sequence of probabilities.
Yeah,
like
they call it variance, right? Yeah.
In this cycle of 10 trades, I've won 6 and lost 4.
Yeah.
So my win rate's 60%.
Yeah.
In the next 10 trades, I've lost 6 and won 4.
Yes.
So it's the same thing but flipped.
Yeah.
What was the difference between the first 10 and the last 10? Should be nothing.
Yeah.
But the problem for most traders is they don't understand that doesn't matter what model it is, there are going to be cycles where a win rate might change. There are going to be cycles where I might even have won 8 trades in a row. Maybe.
Yeah.
But they don't see it the same way. Okay, maybe you won 4 in a row. And you lost 4 in a row.
Yeah.
What happened to the first 4 that you just won? So I personally believe the only reason people actually, let's say in an ideal world, that hypothetically someone's risking 1% on a funded account for their phase 1. I believe that the only way, if someone has a decently profitable model and a proven edge, the only way that you'd fail was that in that whole cycle of 10 potential trades that you took with your max drawdown, at some point after the 4th loss, you've just completely abandoned it. I think so.
Yeah.
I don't think
the
that
chances of you actually hitting 10 losses in a row is very unlikely.
Very unlikely.
Yeah.
And and it's a probabilities game. And for me, higher time frame itself was like the thing where I was like, the mathematics and the logic is, and it's just the way it works.
Yeah.
And people can debate this if they want. It's just fact.
Yeah.
It is a higher probability for me to win a lower risk to reward trade on a higher time frame.
Correct.
Because everything's in your favor. Number 1, you're trading higher time frame, which is easier.
Yeah.
Number 2, you're trading lower risk to reward.
Yeah.
If you put those 2 things together, the actual probability of you winning the trade is higher than a 1-minute time frame against the trend, for example.
Yeah.
So it comes down to that. Now, that doesn't mean you're going to have a 100% win rate. However, it means most likely over the cycle of trades, you would probably be profitable.
Yes.
So if you're doing a model like that, where the maths is on your side, the logic's on your side, and the probability is on your side, and somehow you lost 10 trades in a row, I believe that most likely after a few losses, you ditch the plan and you start trading something else, or your psychology got the better of you.
Yeah.
Because it is very unlikely for a proven strategy. It can happen, by the way. I'm not saying it will never happen, but it's I think it's something that's unlikely, and most people will abandon after a few losses.
Yeah, well, I could just nerd out and talk about stats for a while, but it comes down to the expectancy of your system, right? If someone does have, someone say, oh, well, I've only got a 20% win rate, but I've got a 1 to 10 risk to reward, so over time it's profitable. That might be the case, but your risk of ruin, like the chances of you hitting 10 losses in a row is very high.
Very high.
So they'll go into a challenge, risk 1% per trade on this strategy, and then they will take 10 losses in a row. Whereas if you're using a lower risk to reward ratio, but your win rate is 50%, 60%, 70%, your chances of actually hitting 10 losses in a row is so low that you can risk 1% per trade. Like if you have a very low win rate, but still positive expectancy, you need to risk like 0.2% per trade, or 0.3, or like something that's going to allow you to hit 30, 40, 50 losses in a row, which is the benefit of using a low risk reward ratio, is that it smooths out your equity curve, right? It improves not your expectancy, but it reduces your risk of ruin.
That's right.
Which is
so
perfect.
Even so, with the model that I trade, I said there's an intraday model and there's a swing model. However, the way I describe it to the mentorship, and also this is just how it is, it's one model.
Yeah.
It's not 2 models, it's one model. It was based off of the weekly outlook or weekly analysis.
Yeah.
So that's when you decided if you were going to take the swing or the intraday. But it's not like it's not in the way that, you know, you just say, okay, today I feel like taking a swing, or today I feel like taking the intraday.
Yeah,
it was what made sense from the rules, right? So anyways, that's one thing. But anyways, on this Alpha Capital Group account, this one I'm trading now, I have a 79% win rate over 2 months with $25,000 in profit. So it shows the trade frequency, number one, there's not many, and it shows you know, that if you let time do its thing and you have a consistent model, a profitable model, then you can actually have...
I think about 10 people just signed up to your mentorship just then, by the way.
No, I don't want people to get a facade.
No, this is it. But
so
having that much track record on a prop account is I mean, that's proof, right? That's proof that the system does actually have, you know, expectancy over time.
And that is based off of 2 months. It was February sometime.
Yeah.
Maybe mid-February. I missed the first payout date, actually.
Okay.
Right. But I ended up getting that. I didn't complete a trading day. Yeah. So anyways, I ended up doing it. I got the payout. It was good. Got the account refresh as well. So obviously the way I trade prop firms is maybe different to a lot of other people, because I kind of rotate accounts in a way. I just think it's the smartest thing to do. And this month, even so, I don't think it was one of the best months that I've ever had. But rotating with all the other accounts that I have, it's been a $30,000 month. So for me, it's like, as we both said and agree, prop firms are the best, and I'm biased, but it is. I don't see another business model that you can do the same with the same amount of capital.
Correct.
And look at the freedom that you have as well. Like, I mean, I told you I just traveled here.
Yeah.
Today I've got a payout due on one of my accounts. Like, and it just shows you, you know, you can really make it in trading. And I think a lot of people give up, and I understand why, but it's...
it's the hardest way to make easy money, man. But if you can stick through the pain and get to where you are now, man, like, that's living the dream, right? Yeah. You're living the dream.
Yeah. Well, I guess.
Well, the only way's up. Like we were talking about before, like, in 2 years, 5 years, 10 years, like, we're still just going up. But once you cross that point where you're actually doing the thing, right? Yeah. Man, amazing. And the payouts with Alpha that's pending, right?
I do have one pending with Alpha, but the one from today is not with Alpha.
Okay.
It's with another firm.
Look at this guy smashing it.
Oh, cool. I mean, that's the thing. I think that obviously Alpha is a great firm. Yeah. You know, so that's one thing, number one. Alpha is a great firm. But if you have the skill of trading, you can get Alpha and you can get anything else.
Yes, sky's the limit.
You can get sky is the limit. So I don't limit myself to. I think if you're a trader and you can do it on one firm and you can do it here, sky is the limit. Yeah. Well, there's nothing stopping you from, like, I don't know, because I've seen, I know I'm very grateful of what I'm doing. I've even seen people doing even crazier figures. I've seen recently a 2.5 million payout from someone.
Correct.
It's crazy. Yeah. So, you know, there's levels.
Yeah, exactly.
There's levels.
But fundamentally, what he's doing isn't any different to what you're doing, right? It's just the time it takes to scale up and acquire more capital and stuff like that. So that'll be you soon, bro.
Yeah.
Amazing.
Yeah, maybe.
Yeah. I guess talking about prop trading.
Yeah.
You said sometimes you'll like swing based on red folder news and stuff. Do you? Because a lot of firms have got like restrictions on news. Do you use like the swing account with Alpha so you can?
No. With Alpha, I accidentally at the start chose the normal one.
Okay.
So if I am in a swing trade, I just have to wait till the news is over to actually...
Yeah, because you can hold through, but you just can't. Yeah.
So I'll just have to wait until the news is actually it's over.
Which, if someone's trading on the 1 minute chart, you've got no chance.
Yeah.
On the weekly...
Oh, I'm looking at...
People talk about these massive news events, but it just prints a 15-minute candle,
it's the same. On the weekly, it's relative to where price was already going.
Exactly, yeah.
So... I did this exercise for the mentorship once. I said, look at all the daily candles in the last year. Yeah. Can you tell just by looking at the daily chart what day was news? No. Because the way that news happened is on the higher time frame. And relatively, if you are trading that, it's, you know, when people are taught nowadays, they're like, oh, news? you trade news because they're thinking about them trading news on their model.
Yes.
But you're not factoring like a 40 pip stop loss like I am.
Exactly.
So 50 pip, 60 pip even. So I think that it's completely irrelevant to the it's completely relevant to the strategy.
Yeah.
And if you're trading a different strategy, then it's not for you, and you should never look at trading news unless you're safe trading news.
Yeah.
But I think it's that's volatility.
And
to me.
having a strategy you can use on a prop firm is important as well, right?
Oh, yeah.
Because there's no point if someone's got a strategy that's based on, you know, trading these like 1 minute chart patterns with crazy news things, and that's going to breach the rules.
Yeah.
Then there's no point.
Then
Whereas,
there's no
like
point.
you said, if you can actually have an account where you can trade your strategy and you don't need to worry about those sorts of things,
Yeah.
even better.
And that's the point as well. And I said, you know, you might be a very, very good trader, you think. Once you master prop firms, and if you go back to personal, you're better. You're better than you were anyway. Like, you know, people have this debate about if personals are better, you have this, you have that. If you can actually become profitable trading prop firm accounts, the skills you'll take back to your personal account, if you were to do that, you'll be a much better trader.
100%.
To even listen to the rules, to maybe do a consistency rule, to maybe be able to have a strategy that aligns with this, and you've not breached this, you've not breached that.
Yeah.
And you're trading with risk management, you will end up becoming so much better anyway.
Like I said,
So
even
it's
having
good.
like a daily loss limit.
It's like a trading boot camp.
Yeah.
In a way.
100%. Yeah, it forces you to use risk management.
So if you were not a good trader and you went through the ranks and became funded and then got funded again, and you got these payouts and payouts, I think that's like your graduation.
Yeah.
Yeah.
And do you still trade personal? Like, do you take some of your profit payouts and?
I was originally, but I don't trade personal at the moment. I think, I mean, for religious reasons, I think it's a very debated topic.
Okay.
So I was. Some people will say it's fine.
Okay.
And some people will say it's not fine. So I'd say it's better to just leave it for now
that's
until
fine.
I get maybe more proof that
Yeah.
it's...
Well, even better reason to trade prop firms.
Yeah.
So there we go.
Yeah. So,
Oh, that's amazing.
yeah.
Barney, I can wrap it up there, man. But
Yeah.
it's been super, super cool talking to you. And it's nice to like meet a
Yeah.
mentor, wears the heart on the sleeve, isn't
Yeah.
afraid to show the wins, the losses, the journey. And man, the only way's up from here, man. I look
appreciate
forward. I mean, if we give you another podcast
Yeah.
next year, the year after that,
Yeah.
see where you are then, man.
Yeah,
Because it seems
hopefully.
like huge things are coming.
Oh, I hope so.
Fantastic.
Thank you
Shake
very
hands.
much.
Thanks for having us. Okay.
Thank you.
Guys, thanks for checking out the podcast. Subscribe, like, check us out on the socials, all that stuff. And we'll see you in the next one.